So, mortgage rates to hit 3%. Generation home lenders just offered their first 5-year fix at 3.99% just this week. Amazing news. Good afternoon, welcome to Market Wrap 186, Stuart Williamson here at the helm. Well, hot on the heels of our saying last week that predictions always go wrong. That has just happened. Basically, mortgage bills fall £160 a month amid unprecedented rate wars. Amazing. Then we're going to cover the top 10 emerging property hotspots. So rate wars and hotspots. Lenders have kicked off the new year with mortgage rate wars amid hopes that the Bank of England will cut borrowing costs. Britain's biggest mortgage providers, Halifax, cut rates on its mortgages by 0.92% on Tuesday, equivalent to £162 a month on a £300,000 loan, with 25 years of repayments. Leeds Building Society also cut rates by 0.5 percentage points and is now offering a 2-year fix at 4.6%, according to Moneyfacts. Other lenders, such as Kensington, have withdrawn all their offerings with the idea of relaunching cheaper loans this coming week. Mortgage broker Ranald Mitchell of Charwin Private Client said, "Unprecedented rate war is well underway, with seismic moves, and this is to be expected further on in the year. Net mortgage lending predicted to be lower than last year. Lenders will be pulling out all the stops, not just to acquire new business, but also to protect their existing customer base." He went on to say, such vying for business as well as new build initiatives being rolled out and pent-up frustration from the inner purchase market last year could mean lending forecasts are well off the mark. Lending last year fell by 28% across the UK, with a further 5% expected this year, said UK Finance, the banking trade body. James Thatch, head of analytics there, said he expects a modest increase now in actual lending activity in 2025. Currently, Generation Home, as I mentioned, a small fintech lender, is offering a 5-year deal at 3.99%. No one else has yet launched a mortgage starting with a 3, according to Moneyfacts, but it's on the way, apparently. Peter Stokes of the brokerage Davison Deem said, "This is undoubtedly down to the big players postponing rate reductions before Christmas. Knowing they will be working with skeleton staff over Christmas and many brokers will be shut for the holidays, they didn't change their offerings. Now everyone is back. He fully expects the big hitters to start lowering their rates to reflect the reduced cost of funds. Maybe we'd even see the exclusive 3-point-something rate for a 5-year fix from one of the major lenders in the very near coming days," he said. The Bank of England is expected to maintain rates at 5.25% at its meeting next month, but markets are betting on a reduction in May. Anil Mistry of brokerage R&R Mortgage Solutions said this anticipated move could spark a cascade of mortgage rate decreases. Time for borrowers nearing the end of their current deals. Cascade. They just love this terminology, the broadsheets. Daryl Doffer of brokerage, the mortgage expert, said, until this May 24th decision, it was likely that the main only mortgages requiring big deposits would be cut. He added, the biggest reductions will be on retention products. Long term, if inflation continues to fall, this does put pressure on the Bank of England to cut rates sooner than may have been forecasted. In this game of rates, nothing is certain except the uncertainty. Great quote. Okay, so top 10 emerging property market hotspots according to the experts. Who are the experts? At Hamptons. Kearsney in Kent and Balleston in Glasgow are among the next property hotspots, analysts suggest. Hamptons say in London there has also been a 71% surge in interest in some locations. East Ham, where property sells for 410,000. Basically, the top 30 areas in the UK where the number of people registering to buy a home has risen the most over the past year. So it's not actually prices, but people registering interest. This is where we'd like to move to. According to the data, 12 areas in the south of England saw a rise in popularity, but the majority of areas that saw increased interest were in Scotland, the Midlands, the north of England. Anisha Beveridge, head of research at Hampton, said, affordability is at the heart of this. There are only 5 areas on the list where prices exceeded 400,000, and typically these are the more affordable pockets of London and the south east. Generally, it's the more expensive markets that have been hit hardest by the higher interest rates. This is because households in these areas tend to have bigger mortgages in pound terms and are therefore more exposed to higher rates. This data, the research which is drawn from Countryside Analytics, the data looked at the total number of people registering to buy a home and how much that metric has risen over the last 11 months of this year compared to the same period in 2022. Overall, 12% fewer applicants were registering to buy a home across Britain from January to November this year compared to the same period in 2022. Average house prices have fallen by 1.8% because of higher borrowing costs. Prices fell further in southern England, 3.4% compared to the north, so 3.4% in the south, very close to being flat in the north. Transactions across the UK were also down 10% compared to before the pandemic, and prices are now 4.5% below where they were at the all-time highs of late summer 2022. The average property price in the UK is now $257,000. So where are these hotspots and why are they there? Kersney near Dover, applications up 77%, 321,000, 4.7% rise this year. It's close to the cliffs of Dover, Canterbury Cathedral and direct ferry routes to France. Airdrie, applications are up 72%. Average house price there is 135,000, which is up 2.2% for the year. The location is a short drive to Glasgow, but also you can get to places like locations like Calendar House and the People's Palace there, which is very pretty. East Ham, again up the same amount, house prices are 410,000 there. This is a short commute into central London and close to places like Westfield Shopping Centre in Stratford, which apparently is a tourist hotspot. Ballaston in Glasgow, again, same sort of percentages, up 70%, £260,000. It's a great bustling location. It's virtually in the centre of the city. It's close to Glasgow Botanic Gardens. Sutton. Now Sutton I know has become a hotspot for a lot of Hong Kong Chinese people emigrating to the UK. Applications are up by 67%. Average house price is 433,000. It's very close to the Surrey Hills. Outstanding natural beauty, plus very close to the centre of London. Easy to commute via rail links. Number 6, Burton-on-Trent in Staffordshire. Average house prices there are 225 and it's up by 1.2% this year. It's just between Derby, Birmingham and Nottingham with rail links to all three cities and perfect for the work from homers. Paisley, again, £151,000. It's 1.2% up. Again, close to Glasgow. So we've seen a lot of this work from home influence. And although unemployment is increasing, which will put more pressure on people working from home, it's still now a new part of our society. So properties out of cities will maintain their value, properties in cities will maintain them, and it's only the sort of in-betweeners that don't really get it that aren't going to benefit. Bow, Tower Hamlets, up by 4.6% on the year. It's close to Dalston, Hackney, Victoria Park. It's a good place to buy if you want to be in the city. Bearwood, again very similar to Burton. A short drive into Birmingham, great rail links to London with HS2, great rail links to the north and south of England. And finally, Milton Keynes, £317,000 there, up 3.2%. Basically it's just full of shops, restaurants, bars. It's a good place to live if it's a 15-minute city approach you're looking at. But it's also well connected to London, and you can go to places like Bletchley Park, which is a great place historically and just to go and chill out. So there we have it. Rates are falling a lot quicker than we said. Last week I was wrong. The projections I came up with and the big heads came up with were incorrect. Rates are falling a lot quicker than we think. That's very positive. It's good for the market, create positive sentiment, and that will help the market move in the UK. Again, it's all about doing your research. Those top 10 locations for buying property, there's some real gems in there. You know, it was a while ago, you'd want to buy in Chelsea, but you couldn't afford it, so you bought over the water, you know, into the other side of the Thames. If you did that, you got a much cheaper property. It's the same thing with these places. They're just a short stone's throw from expensive locations, but people are going into them because they're more cost effective. So there we are. That's Market Wrap for this week, 186. Do hope you enjoyed it. I hope your new year has started well and all your resolutions are out the window already. Thank you very much. Do take care. Do like if you like it. Subscribe. Share it with people. It's just basic information I've gleaned from the market. Cheers. Bye-bye.